Happy trading. Happy Tuesday. Nothing I'd rather be doing than trading on this Tuesday. Let's go over our trades for the day. Well, first, let's go over flow state. Here's the float for C. Here's for CVX. I would say CVX has C beat. Let's go to Intel. I think CVX has Intel beat. Merck. Nope. Uber has good flow, but I'm going to say CVX might have Uber beat. No, I think Uber has it beat. Let's say I stick with Uber. Let's go to Walmart. I'm going to say Uber has Walmart beat. So the best flow for the day was Uber. You got a nice. Now, our first trade for the day was Merck. Let's look at that. And it looks like we weren't looking for the one with the greatest flow. We were just looking for a positive trade, which is an issue. We want to go for the one with the greatest flow on our first trade because that's when the greatest moves happen. So the first trade of the day needs to be really going after that greatest flow and trying to find one with the greatest flow potential, not just one that's a positive trade. Again, this was a positive trade, and what we saw here, we saw a bull 180 right here, and we could play it all the way back up to the 200. We knew it would probably go a little bit higher, but not too much higher, but we knew we could play this all the way to here. That was our first trade. It set off the day for a positive trade. Really, let's say we got in here, set the stop, let it ride up, got out, let it go back, got another buy-in opportunity, set the stop here, and let it go there. That would have been a nice whale. But that's not really what we were after. And that's an issue. We need to go after whales. That's the only way you stay in this game. After that, we got this down pressure. And down pressure again, down pressure again. Looks like this is starting to be a sell zone. Now we got 11:30, where that was a sell zone. Then we got off flat 200, set the stop. Nope, didn't work. You got off a flat 200, but that's 12 o'clock. You're probably not getting in around this time. After 12, we're not getting in. So let's just avoid that. It's usually chop zone. Then we're back in at 14. Stop. Moves already started from here. That looks like an exhaustion bar, so I'd probably get out of it. Position of power. Green bar takeout. Set the stop. It's a little risk. %. Get in it. Set the stop. Get out. End of the day. Next is CVX. Here's the Fab 4. We have above it, nothing to the left. We buy into this bar. Set the stop. Color change, buy more. Get out. Leave a lot. Add. Double dip. Elephant. And it keeps going. So what we did is we sold here and we got out here, which I like to get out because we gave it this bar, so we risked the right amount. I don't like to sell. Keep in mind this previous day close can act as if it is the 200, and that isn't far enough away from it to have a sell. We were thinking 3-finger spread, when that's just now crossing this 200. So the better buy or the better opportunity in this is just this buy right here or this buy right here, and no sell. And if you are going to sell, maybe sell this one. That takes out all of this. And let's see what that does. 1 push, 2 push, 3. Probably get out right there. And now we have 11, 11:30. 12. You're out of it. Unless something crazy happens. This could warrant it. And the reason that could warrant it is just the reversal time of 1:30. That's about 1:30, 1:15. Bam. But you're out of it. It looks like it cuts up. Doesn't work. You could try it again. Remember, you can only try things twice. You try it again. Remember the break. But keep in mind that this 200 isn't flat. Remember, we're looking for a flat 200. That's the ideal situation to be in. We try it here. We play it. We get to the 200. Probably get out. It bounces like more than likely it would off of a 200. Comes back down. We get another opportunity right here. You could play that one. You get all of that right there. And then there's the end of the day. Or right here, that would be a nice one. off the 200, clearing. So the next stock that we traded would have been Uber. Uber, we saw this on the open though. He didn't take it. I wish we would have really took it. Um, this is the wrong color right here. But if you combine these two bars right here, this little bar with this big bar, you get what we're looking for right here in the bear 180. And that bear 180 leads to a 1, 2, 3. Get out. You could even take it even further. It looks like it went even further. Now, what we tried to do is we tried to play it up. We saw 1, 2, 3, and this green bar right here was greater than this red bar, so green bar takeout. We bought in 2, but as soon as it went against us, we got out. So, I mean, it's a good trade. Like, it's a good trade. We didn't trade it incorrectly. It's just that's not the best opportunity to go for. Like, if we're talking about best opportunities in this stock, we have a position of power and we have a downward flowing 20. The best positions would be going with the downward 20. So this green bar takeout, this green bar takeout, this green bar takeout, this green bar takeout. Those would be the best trades. We're trying to go against the grain with downward flowing water. That's not our best. It's just not our best opportunities. That's not going to lead to great wins. It's just going to be frustrating. It's like Hail Mary plays. Those aren't what good traders are going for. They're not going for Hail Mary trades. They're going for consistency. So if we keep going down, I might have played this, not going to lie. Set the stop there. Played it when it passed here. But eventually it gets knocked out. But that would have been a late play too. 11 o'clock, 11:30. It's 12. We're not playing anymore unless we get a move that we just can't ignore. 14. We're back at it. Do we see anything? That might have enticed us with a stop. But as soon as we got in it, it knocked us out. Nothing else. Walmart. So Walmart, this is a good trade right here. One thing that you can keep in mind is if you're not using the tail bars, you can ignore them. If they get in the way, you can ignore them. Now that's kind of an art, but it's not exact. But you can do with it what you may. So if you erase this one and erase this one, this bar right here would be clearing. So you have a clearing elephant bar right here. you would buy into that. Nothing is to the left of that. If that when that bar is right here, set the stop, and now if you didn't catch that, it would be nice to say, hey, this is position of power, so green bar, take out red bar, we know we can buy that and set the stop. What we tried to do is we tried to do right here a bear 180, which I'm not opposed to this move. 1, 2, 3. I think that's a good play. It just didn't work. It just didn't work. Not all the trades are going to work. The real thing about all this is picking out the right plays, when to pick them out. And right now, our best plays are this and flat 200s. Those are our best plays. And really, the flat 200s are have a high priority over when the moving average to 20 is going up. I'd say third is probably when it's going down. And we tried to play it going down again. We tried to play this tail bar. That's a bad trade. That's not a big enough tail bar to consider it a tail bar. We were just anticipating wanting to trade, wanting to get in the market. So we got in here and then we got out. That's just an accident buy, so we had to sell more. And then this one, this bar actually was all the way down here. So we were like, okay, that's a sell, set the stop here. But as soon as we got in, it went all the way back up. So don't know if we used the Bitcoin standard of a minute and 30 seconds. Not 100% certain when we got in. And it doesn't really leave the time. So nothing to really tell, but I can say that this was a bad trade right here. And I can tell you that this was a bad trade right here. And I got out here, right there. So these two bad trades, I had a couple of bad trades. Some of them were acceptable with the risk, but you can't have that many bad trades and expect to have a great day. So moving forward, it keeps going up. We're at 11:30. We're kind of waning off. Maybe it makes a move. Maybe it doesn't. This might be a move that we would take at 12:30 just because it broke it and it stayed within. Set the stop. Was going to say get out, but get out now. Nope. Tail bar. Bear 180. Wow. And it only takes one of those moves. And that was, I guess this would have probably been the first one. And it makes you question, it really makes you question, is it worth it getting the first indicator that it's going to go down? I mean, this is like, hey, it's spread, it's done a hockey stick away. 1, 2, 3. And then you get a sell indication right here, tail bar. And then Or you could say, hey, wait for it to break in, and then wait for opportunities for it to go down. There you go. There's one. There you go. There's two. There you go. There's three. I could say that's 4, 5, 6, 7. 7 opportunities to get in that move. All weren't equal, but 7 opportunities nevertheless. So next, let's go into the moves that we didn't take. Citi. This was kind of like Merck, but it was a better. I think it had a better outcome. One, two, well, let's say Fab 4. 1, 2, maybe a 3. Bull 180, buy into it, expect about halfway. Got halfway, you'd get out. This one just kept going though. Now here's what we really need to focus on. Our best plays come off of a flat 200. So if we get an elephant bar off of a flat 200, that's a takeable play every time. Clearing to the left, we take this play all day. Set to stop. Wow. This is the move we're trying to capture every day. Flat 200. That took us to about 11:49:50. So we're at lunch at this time. Probably not making any moves. Kind of flattish. Not really going down. One could say, hey, maybe we take that elephant bar off of it. Exhaustion elephant bar. Get out here. That's not in a position, so I don't know what to do with it. Our positions are narrow state or wide state. This is a narrow going into wide, so that's the opposite of what that position is. I don't know what to do with that. I'm going to ignore it. Maybe it was playable down, but just I ignore. Like, you gotta go by your rules. And the next one would be Merck. We did Merck. Intel. So Intel, Fab 4. This first bar, you could look at that. 1, 2, but you wouldn't have too much space because the Fab 4 is where it is. You could play it off on this one. But again, that's not going to have too much flow. Again, you could play this off of the previous day's close. Looks like it got about 75% of this move. Probably expect 60%. Not knowing, it's kind of just chopped up, and you can tell because the 20 is flat. So just wait until we see we have a move. I'd say sell. Get out. Sell. 1, 2, 3. Probably get out majority of your shares. Get back in. New lows. Get out majority of your shares. See if you can get a new low. Doesn't get a new low, you know it's going to go to new highs. New highs. This is going up now. So red's going down. Green takeout. You know it's going to be difficult to break this. Get that area right here. We can say, hey, that's a flattish 200. Let's play that color change right here. It's going to be difficult to break through that previous day close. Didn't really get a move to play off of this one. Got a new high. There's the end of that. Those are those trades for today. The biggest lessons to take away are, hey, go with the 20. Go with the 20, kind of like on this one. That red bar is going down, but the 20 is going up, so we're going to buy that green bar takeout. And the other one is we play flat 200s. The best example is Citi. This is our move. This is our primary move right here. That will make you a lot of move if you just focus on that. All the way left, clearing bar, clearing elephant bar, flat 200. That's all you really need to know. Till next time.